Alright guys, today's video is very important. We just nailed a downside move on SPX. Oil is ripping into yearly highs and small caps are getting absolutely smoked. But we're still pulling 100% to 1000% runners out of this tape. In the next few minutes, I'll walk you through why this SPX moves is not a crash that's coming. It's the crash we're already trading through. I'll also talk about how USO hit the exact levels mapped out and what that means for oil names next week, and also what I'm doing with IWM and small caps. We'll also talk about a breakdown of the SST trade that we took on Friday. What a monster winner. For the last 2 weeks, I've been telling you guys that near term price that I'm looking for on this is 6360, and now we're basically sitting right on top of it on the daily chart. This should not surprise anyone who's been watching the channel. This is exactly the kind of level I've been hammering. When technical analysis is dialed in, it almost looks like cheating. My options buddies have been joking that this feels like insider trading. It's really not. It's just clean levels, a trend, and respecting what price is actually telling us. Now, what's driving this downside? Oil is ripping, and that's an inflation story. WTI pushing into the high 90s means higher input costs, higher transportation costs, and that feeds straight into that sticky inflation. Higher oil means higher inflation risk, which means rates stay higher for longer. And that suffocates equities, especially growth and small caps. You've got strikes on infrastructure, steel, even nuclear related targets. Some ships are literally just turning back. Allies talking about escort missions and key shipping lanes. That's a real supply chain disruption risk, not just Twitter drama, and markets hate that kind of uncertainty. Number three. The Fed tone has shifted from confident to cautious. They're openly talking about a fragile labor market, fragile inflation expectations, and supply shocks as a risk to inflation. Translation, they're not in a hurry to cut rates and save your favorite garbage small caps. Number four, market internals are weak. Breath is awful. Decliners smashing advancers, with tech and financials leading to the downside. That's not dip buyers stepping in, that's just distribution. And finally, sentiment. The fear gauges are flashing extreme fear, but we still haven't seen that true panic flush. That tells me there's room for this to grind lower before we get a proper, juicy bounce. So, when people say the crash is coming, understand this. We're already inside the crash. The chart doesn't lie. The difference is, while most are frozen, we're still pulling big runners out of this environment. Speaking of what's driving this move, let's talk about oil and USO. In the last video, I said very clearly once USO broke above that 114 zone, which was a key 1 hour resistance flip, it had room into the 120s. Fast forward to today, and prices followed that roadmap almost perfectly. We're now pushing into that 126 plus area with yearly highs up at near 129, which lines up with those prior 2018 highs on the higher time frame chart. That's a huge confluence zone for profit taking and potential volatility. Now, on individual oil names, I still think swinging long is dangerous because we can get random diplomatic or war headlines at any time during the week that completely change the risk profile. But that doesn't mean there's no opportunity. For me, this is a day trading and scalping environment on oil names that track USO well. The two I care about this week are Turbo Energy and ANA. They've been responding very cleanly to USO's moves, and when USO respects levels like this, those names can give fantastic intraday momentum. Now, let's zoom out from oil and talk about small caps through the lens of IWM, the small caps ETF. In the last video, I pointed out that rejection right into that blue supply zone starting around 252 and said it was not a good sign. You can now see how that played out. We rejected hard and have basically been in free fall back toward that 240 area. Below that, the 230 zone I've been highlighting starts to come into play as the next major demand area on the chart. So the way I'm approaching small caps in this environment, I'm going to stay selective with 2 to 7 day swings only when the setup is extremely clean. And I'm going to be focusing mainly on intraday, day trade structures, breakouts, pullback entries, and clear volume confirmation. That approach has been working incredibly well this week, and that brings me to one of the cleanest momentum plays, SST, because this is a textbook example of what can still happen during a market correction when you know where to look. This was a plus 135% day trade, sniped around $1.99 and ran all the way to about 470. If you look at that intraday chart, you'll see 6 distinct breakout structures during regular market hours. Small consolidations of flags and continuation patterns, each one stepping price up toward the final target. This was not random luck. It was pure momentum backed by lower time frame technicals and strong volume. The plan was executed live on X and the Discord. Personally, most of my position was locked in around $4 because at that point I was absolutely exhausted and sleep deprived. Runners were left with a limit around $4.70, and then it was time to touch grass. Took a long drive through Banff into Jasper with the boys. At the end of the day, this is why we push so hard to refine our trading, to fund the lifestyle, the freedom, the experiences. If we're never actually spending that money or enjoying life, then what's the point? So the mission is simple: keep getting better, keep taking high quality trades, and keep leveling up both the P&L and the life outside the screens. Now, let's look ahead to a setup on watch for this week: EONR. EONR is a marine shipping name that ties beautifully into that whole oil and shipping theme. You probably remember this recent monster move it had from around 56 cents up toward that $2 area. Right now, price is coiling in a really clean range. On the chart, you can see that horizontal range with a clear support floor and a well-defined resistance band where price keeps getting pinned. That kind of structure is exactly what is preferred for breakout moves. The plan is straightforward. As long as that 87-cent area holds as support, this stays on the long side of the watch list. First target on a breakout is a push back into that 125 region. And if momentum plus a volume step in, then a secondary leg toward that 162 plus becomes very realistic, given what the stock has already shown it can do. This is a type of name that can give a mini SST style move if the broader oil and shipping narrative stays hot. All right, guys, it's the weekend, so I won't keep you glued to the charts any longer. The big picture is this: SPX is in the crash. We're not waiting for one to happen, we're already in it. Oil and USO are driving a lot of the macro pressure, but also giving us insane trading opportunities. Small caps are weak overall, but selective momentum plays like SST, UGRO, EEIQ, and the likes of ARTL and potential setups like EONR are where the edge is. Enjoy the rest of your weekend, recharge, and we'll hit the market again on Monday. And I'll see you guys in the next one.